Hi guys, welcome to Brovesting. My name is Taryn.
I'm sorry.
This is just general share advice only. It's not investment advice. Today we'll be talking about what is Bitcoin and how it is used and everything. So let's get into it. Introduction to Bitcoin. Uh, for me, Bitcoin is just a free and open source software that lives on the internet. It's a digital bearing asset like a commodity. It is scarce, it's divisible, it's portable, and it is transferable to anyone around the world, and it is fungible. Relies on the global network of peers to enforce the rules. Do you have your thoughts on this one, Si?
Yeah, I mean, it's essentially like gold 2.0. It has all the trends, like a lot of the properties of gold and money in general, like sound money. Um, it offers something that gold doesn't, which is the ability to spend it anywhere, spend it how you like, transfer it to any currency. So you can, go from China to India to Australia to US and be able to use it in all different currencies, be able to get all the different kinds of money, use it there as you like. And on top of that, the fact that it's a programmable software gives it the ability of really being something that can be upgraded over time, that can be built on top of. This is not the final iteration of Bitcoin. This is just a start. So that's something that I think is great about Bitcoin.
Yep. So let's get to the next slide. How the transactions are made. Just move your screen a little bit. So transactions on a Bitcoin are made with use of the blockchain technology. Blockchain technology consists of a single chain of discrete blocks of information arranged in chronological order. In general, this information can be just a strings of ones and zeros, meaning any type of contract between two parties can establish on the blockchain, as long as both parties agree on the contract, taking away the need for any third party. This opens a world of possibilities, including peer-to-peer financial products, where banks and other financial institutions don't need the involvement. What's your thoughts on this one, Si?
Yeah, I mean, this is just the starting phases. It's not any way finished, but like right now it's being used for simple transactions of, using peer-to-peer trading or like on exchanges where you sell your Bitcoin to someone and that's kind of how it's done. And that's it. You sold it directly to them. There's no intermediaries involved. The exchange is just there to kind of facilitate the transaction, not to validate it in any way, shape, or form. It's just a platform. Even if they're not there, all you can need to do is get their wallet address, and you can transact your Bitcoin that way as well. But this is going to expand into other worlds, like you can use it in gaming, you can use it in the art world, you can also use it in like real estate and other things where you have multiple different intermediaries in multiple different ways. For example, in real estate, you have the real estate agents for both parties, you have the banks in between, you have any um, accountants or loan officers making sure the loan's approved and other things like that, and they go speak to the bank to get the actual loan. So you have 3, 4 different transactions just to buy and sell a house, where in Bitcoin, as long as you have the proof of funds, you need to just transfer the money and it's there.
Yeah. And also, like banks can say no to like if they don't think the house is valued at what you think it's valued at in a sense. If you want to pay like 500,000 for the house, the bank will probably say it's only worth 450,000, so they're probably not lending you that amount, or you have to find other funds, kind of thing.
Mm.
So yeah, in that sense, it probably makes sense to use Bitcoin.
Mm.
And yeah, it's just pretty much like it's me to you and you to me kind of thing. We don't need anyone else in the middle to like see our transactions or question why you I'm sending money to you or why you sending money to me. I guess in that sense, so that's one good thing about it. So it's
Um,
to you in a straight line, I guess, in that sense.
yeah, I mean, like you have to still do your due diligence as to who you're sending the money to and what's it about. Like, make sure they have the right account or other things. Like in the case of the house, you want to make sure you send people over to check that the house is in good condition and other things. But you don't need to have a bank in between. You don't need to pay extra interest rates and other things.
Yeah.
You could set it up all with like the other party themselves and go from there. And the major, I guess, the need for a bank in that scenario would be to lend you the money. And in this case, Bitcoin can be used with intermediaries like BlockFi will lend you the money. And it's not really, for example, if you think about BlockFi, you need to put more money than what's there And if you think of Bitcoin as something that's going to go up in value over time, it's definitely going to be worth your time to invest it or take a loan on it and then buy something valuable. And then obviously you'll get it back at the end of the loan.
Yeah. And you can use your Bitcoin as collateral, like using it as collateral. Whereas if you're looking at banks, they'll need all your financial statements and how much you made last year, how much you made the year before, and everything like that before they lend you the money, I guess. Stuff like that. So in that sense, a bit more easier.
Yeah, I mean, it reduces the time frame that's involved. Rather than taking 3 to 6 months for something like that to happen,
Yep.
it could happen in maybe a matter of weeks. Just that
Yeah.
getting to an understanding with the other party.
Cool. Let's get into the second slide. So we're going to what is proof of work. Bitcoin is supported by a distributed ledger known as the blockchain. This ledger contains all the Bitcoin transactions arranged in the chronological order. So you don't have the double spending problem because of this. In order to prevent the tampering, the ledger is public, so anyone can see it, and an altered version would be quickly rejected by the other users. So other people probably would be saying, rejecting the transaction, saying it's not the real version, I guess, of the ledger. The way this tampering is detected is through hashes, which are the long strings of numbers that serve as the proof of work. Bitcoin uses the SHA-256 hashing function to validate and confirm the transactions. The hash is a one-way function. It can only check the data that's been generated, and the hash matches the original data. Solving this problem for the module computer is very easy, so Bitcoin network sets a certain level of difficulty. This setting is adjusted so that a new block is mined and added to the blockchain approximately every 10 minutes. Once a valid hash is found, it is broadcasted to the network and the block is added to the network. Mining is a competitive process, but it is more a lottery ticket than a race. On an average, someone will generate an acceptable proof of work every 10 minutes. But who it will be is literally anyone's guess. Miners pull together to increase their chance of winning these blocks. It also makes it difficult for a pool of users to monopolize the networking computer power, since the machines and the power required to complete the hash functions are very expensive. So what's your thoughts on this one, Si?
Yeah, I mean, like, I frankly don't understand a lot of this hashing functions and other things. I'm not too much into computers. But it's great to see that it has its own self-regulation way of looking at things, that you don't need bodies of regulation in parliament or government looking over how these things work. It has its own function where it gets harder the more people try to get to it, and it gets easier if there's no one there. And not only it gets harder, but like in getting harder, like these things, take more energy and become more expensive. So if a Bitcoin's worth about $50,000, and it's going to take you way more than that in terms of energy to mine it, then you're never going to do it. So it's hard. So in terms of these monopolies that occur with a lot of these people come in trying to mine Bitcoin, the harder it gets, the more less reward they will get. So it's good to see that it has its own self-regulation.
Yeah. And also, it's not just because you got like heaps of mining rigs, I guess, doesn't mean you can win it, I guess, too, in that sense. So it's like just because you got a mining pool operated doesn't mean you have the chance. You have a chance of winning it, but doesn't mean you will win it. So which is really good in a sense that it just keeps everyone honest, I guess, in that sense. So you can just build a big network and think you're gonna get all the Bitcoin, because that's not the way it works. And also the hashing function, it's like the way the hashing function, in my understanding of it, it's like having a puzzles, and using this software they're trying to solve the puzzle, and whoever solves the puzzle the quickest, I guess, will get that Bitcoin in that block, in a sense. So you can solve half a problem, but someone else has solved the other half, kind of thing. They'll get the Bitcoin, doesn't mean you'll get the Bitcoin, kind of thing. So which is keeps everyone honest, and everyone I think keeps on the toe, I guess. And I think the Bitcoin price too, like as it like these things, because all this I guess using this software, it's very expensive. It costs a lot of electricity to to solve these puzzles, I guess. So it's not just like you need the Bitcoin price to be high enough for these guys, for them to make it as a value, I guess in a sense, for them to make it all work for them, I guess, because all these things cost a lot of money for them to build these mining rigs and to run these softwares and the computing power needed to do this software. I think Bitcoin price needs to be a lot higher than where it is right now for this to make sense, or for them to keep on doing it. So which keeps everyone in the system, I think, get their money and their share of Bitcoin, I guess, in that sense. Yeah.
Yeah.
We'll go to the next one. So we're just elaborating more on the proof of work. Proof of work is essentially one CPU, means you got one vote. The majority edition is represented by the longest chain, which has the greatest proof of work effort invested in it. If a majority of the CPU power is controlled by the honest nodes, the honest chain will grow the fastest and outpace any competing chains. To modify a passed block, an attacker would have to redo the proof of work of the block and all blocks after it, and then catch up with and surpass the work of the honest nodes. What's your thought on this, sorry?
Yeah, I mean, it's basically someone trying to go back in through the chain of transactions and like not verify the transactions, so they'll still have their money or their Bitcoin, they'll still have it, so they can spend it again whilst them getting the rewards of sending that Bitcoin in the first place. So, in doing that, like especially when you have millions of transactions going through all over the world, going back and changing it. And I think it's only like after like 3 or 4 transactions have been verified, and then it's kind of like set in stone that transaction's verified, that's done.
Yeah.
So when you have all these transactions going through, it's going to be very hard for someone to go back and fix one and then keep fixing the rest of them when there's all these other transactions coming through all the time. And that's just a waste of time, in my opinion, just trying to mine one block and say no to that one.
Oh, and also it's not an easy thing to do. It's really hard, like literally impossible for them to, because by the time they solve one, like there's like 10 more transactions built up on top of it kind of thing. It's literally impossible for you to do this, which is why the proof of work, the way it is designed, is genius in that sense, and it's like a really one of the best form of I think like as I said, it's like best form software to keep the security of the network where it is, because it can't be broken down in that sense. Yeah.
And I think the biggest thing is the people who like run the nodes themselves. They can see all these transactions come through, and obviously if there's an error in these transactions, they'll look at it and see that there's a problem there, and then vote against that transaction so that modification doesn't come through.
Yeah.
And it'll just be a different chain of transactions.
Yeah. No, that's really good. We'll go to the next one. How the mining works. This is just a picture here. So do you want to explain what this is, Si?
Yeah, I mean, like that's just the hashing algorithm there in the step 1 there. So that's the answer that they need to finalize the block. So that gets put out there, and now your aim is to figure out how to get to that. So you already got the lock, or you already got the key. Now it's trying to find the right lock, or you already got the lock and it's trying to find the right key. Whatever variation.
What are we trying to use? Yeah.
Yeah. But yeah. So you first got the winning number, so it's put out there on each block, so you know that's where that's your aim.
Yep.
And then you got to use your computational power to find them as a click so you get that number. And this is essentially where that energy usage comes in, and them trying to mine the algorithms to get that right number in the end. And the people who do end up mining it and getting that answer at the end get Bitcoin as an incentive. That keeps the miners in touch, because obviously if you have a Bitcoin worth about $50,000 or $80,000 and you're only spending $5,000 in energy, well, now you're in $75,000 in profit. So this kind of incentivizes them to get that Bitcoin, to mine for it, and get that as possible. And then once they do mine it, that transaction is verified and added to a block with that within the blockchain. So first it gets verified, first it gets mined, then the person gets the miner gets the Bitcoin, then it gets verified, added on top, and that it just keeps on adding on top. So people who try to go back and change it, I mean, obviously they're gonna get going against the miners who mined it, saying that's wrong. They have to say that the algorithm's wrong, and then they have to redo that transaction, put in a new transaction, and then do that for each subsequent block that comes through.
Yeah.
So it becomes hard as more miners join and verify these transactions every second. to try and mine that Bitcoin. So that's essentially the mining network in a nutshell.
Yeah. And the more miners it is, as it's saying at the bottom, that the more miners join and verify this transaction on the network, the safer it becomes. Because you got more people doing it. I guess it just makes it harder and harder for someone to attack the system. I guess in that sense.
Yeah.
So yeah, that's one really good thing about it. I think that's the great thing about it because anyone can join and do it too. It's not it's not like only someone with a lot of money can do it. Anyone can do it. If you want to set up someone, you can do it. That's the great.
As long as you got a mining rig and solid electricity power, you can do it. It's going to cost a lot.
Yeah. We go to the next one. It's just I think one more picture there. I think it's pretty much the same thing, explaining again, how it works, kind of thing.
So like you can see it there, like miners are working on a block of transactions, trying to verify it. They come through each single time, verifying each single item using the hash power. And then, but one miner wants to alter block 3 so they can get that transaction back, or they can get that Bitcoin back, or change something about it. And to do this, miners then would have to go from block 4 to 19. And then, the miners has finished block 20. So you have to, alter every single other block from 4 to 19. And node operators are looking at this, seeing each single transaction being altered, thinking, what is happening here?
Yeah.
And they'll get alerted, they'll find who's doing this, and that's how it gets self-regulated. You can see who's doing the wrong things.
Yeah. No, it's really good because it's a distributed ledger. All these transactions are recorded for everyone to see. So
exactly.
Pretty much easy to find who done it or who's trying to attack it in that sense. Yep, we go to the next one, which is the Bitcoin network. I think I'm just going to read the following steps on the Bitcoin network. It's a 6-step process in that sense. New transaction are broadcast to all the nodes. Each node collects new transaction into a block. Each node works on finding a difficulty proof of work for its block. When a node finds a proof of work, it broadcasts the block to all the nodes. Nodes accept the block only if all the transactions in it are valid and not already being spent. Nodes express their acceptance of the block by working on creating the next block in the chain, using the hash of accepted block as a previous hash. So what's your thought on this one, Si?
Yeah, I mean, it's just a long chain of accepted transactions. So each transaction builds on each other. It's not like a completely new hash algorithm. So you have a hash, you finish it, and that creates a new hash, and then you finish it. So each transaction builds on each transaction as that is a blockchain and a distributed ledger. Each transaction verifies the transaction before.
Yep. So we go to the next one. Bitcoin privacy, which is really important. Traditional banking models achieves a level of privacy by limiting the access to the information to the parties involved and the trusted third party. The necessity to announce all the transaction publicly precludes this method, but privacy can still be maintained by breaking the flow of information in another place. By keeping public keys anonymous, the public can see that someone is sending an amount to someone else, but without the information linking the transaction to anyone. So do you want to elaborate on this one a bit more?
Yeah, I mean, so there's 2 examples essentially. There's the one with the Colonial Pipeline recently where the FBI found the transaction, and the way they found it is by using the fact that it wasn't that they broke or hacked Bitcoin or they figured out a way to reveal the identity. It's more that the people who used their public keys, and so the FBI was able to look at the ledger, look at the transaction, look at the keys that it came from, and figured out, well, it was from this wallet address. And then they had the public key for the wallet and they retrieved the money.
Yeah.
So that was one way. And another way you could look at it is that's the way that's private. Like, it's only if you're negligent, then that's how you lose your Bitcoin. But in terms of a bank could get hacked, it could get robbed, it could, anyone could have a mistake. Like, how many times have you seen someone, like a bank teller or someone working at a bank, send like a lot of money to like some unknown person because they hit zero a couple of times, and instead of sending 1,000 or verifying $1,000, they send $100,000, and they can't get it back, or people get prosecuted in those instances. So there's a lot of room for error in like traditional bank and finance.
We go to the next one, sorry. Bitcoin halving, which is an important part of all of this, is like to keep the security of it, I guess. Miners are rewarded with Bitcoin for verifying the blocks of the transaction. This reward is cut in half every 210,000 blocks mined or every 4 years, roughly. This event is called halving. This system is built in as a deflationary uh, one, I guess. This process is designed so that the rewards for the Bitcoin mining will continue until about 2040, once all Bitcoin is mined from the code and all halving is finished. Miners will remain incentivized by fees that they will be charged the network users. What's your thoughts on this one, Si?
Yeah, I mean, like, I guess the first thing is the fact that it has a end point in terms of how many is there.
Yep.
There's 21 million. That's where it ends. There's no more. There's no way to create more. There's no one controlling it. There's no one at the helm who can switch a button or turn on something to make it, make it 22 million or 23 million. So this is it. This is the amount that's left. And over time, it gets harder and harder as well to mine it. And that's why it takes so long. The fact that in 12 years, it went from being a fraction of 1 cent to like $40,000, and in 12 years, like in 120 years, it could be worth easily like tens of millions, maybe billions of dollars for one Bitcoin. So when you look at it in that sense, and how the miners will be incentivized by fees, especially with the fact that over time with renewable energy, it gets cheaper and cheaper for us to use energy. And so the dollar cost ratio in terms of like Bitcoin having this really high value, and then you have energy which gets lower over time. I mean, the energy that my grandparents would have used, or their grandparents would have used, would be a lot higher than what I use today. So you gotta look at it that way, and then the fact that it's being incentivized by fees. So right now, I think if I send any amount of Bitcoin, it costs me roughly $10 or maybe like 0.005 Bitcoin or something. So it's very low, but that's Bitcoin being at $40,000. If Bitcoin's at $400,000, that $10 or 0.005 Bitcoin, it will still be 0.005 Bitcoin, but it will just be, instead of $10, it'll be $100, and if it's a bit more, it'll be like $1,000, and that's just me doing one transaction. Generally these blocks have like tens of thousands of transactions in them. So that's a lot of money to be earned by verifying these transactions for the miners. So that's a good incentive for me, I guess.
Yep. And just to elaborate on the halving event, and I think why Bitcoin is such a genius move is that because right now, if you look at around the world, since because of the COVID, what he has done is that people not going to work and people not allowed to go to work in that sense, and a lot of the business are getting closed and everything like that. You're looking at central bank of around the world printing trillions of dollars. So by doing this, because they're printing money at their will, I was just reading listening to one of the podcasts the other day. They talked about US printed about $4 trillion over 100 history of the country, and they probably, I think, printed about $8 trillion or just over $8 trillion now, which is like $4 trillion just over the last 10 to 12 years. So they're over a 100-year period, they've printed about $4 trillion worth of money. In the last 10 years, they've printed over $4 trillion. So in that sense, because of that, it's putting the pressure on the US dollar, and it's putting pressure on a lot of other currencies around the world, because people are printing as much money. Because you don't have the scarcity accept of it, it will be turning into like Zimbabwe or Argentina, where their money is not worth anything. Like if you look at, just to put an example, in somewhere in Zimbabwe back in the day, for example, a bottle of milk in the morning probably cost you like $5. By that afternoon, it could have cost you like $20. By that night, it could have cost you $100. That's what happens when inflation kicks in. The money that you have in your pocket, it's literally loses its value. Like the $1 is not $1 anymore, and because of that, that's why Bitcoin makes sense, in a sense that because you're only ever going to have 21 million Bitcoins, all of this will get mined around 2140, and that's all it can be. There's not going to be any more Bitcoin because of the scarcity value of the Bitcoin. It becomes valuable because no one can print anymore, and each Bitcoin someone holds will have a lot more value because the dollars in your pocket is losing value day by day because people are printing trillions of dollars. When you can have something, a lot of something, I don't see why it should be valued more in a sense when compared to something that's very scarce, and that's just normal game theory, I guess, in general. And also with the Bitcoin, the way it is, like a lot of people, like I looked at a lot of the podcasts just to understand, like a lot of people talking about what will happen to the Bitcoin once it, like after the 2140, because these people are right now they're getting devoted with Bitcoin, like for doing all this mining work, like like how they incentivize, and they're talking about mining fees that like the transaction fees that getting generated now. That's how they're getting incentivized in the future, which would be really good in the sense that will keep up this like them doing the mining work to keep this network secure and keep all the any intruders from coming in. I guess in that sense. Any more thoughts on this one, side?
No, I mean, he pretty much summed it up.
Yeah, perfect. We'll go to the next one. Just in conclusion, I guess, Bitcoin system is an electronic transaction without the need for a trusted third party. It uses framework of coins made from digital signatures, preventing the double spending problem. The double spending problem is solved by using the peer-to-peer network of proof of work to record the public ledger that becomes impractical for an attacker to change if enough honest nodes can control the majority of the CPU power. Your thoughts on this one, sorry?
Yeah, I mean, I think the biggest thing to understand about Bitcoin is it's only 12 months, or sorry, 12 years old. If you look at gold, it's been around for like a few thousand years. The dollar's been around for a while. Like currency in general has been around for a long time. A lot of the dollar's power has come from its military and its trade negotiations that it did with the rest of the world, and so it's been looked at as a reserve dollar. But technologically speaking, Bitcoin's something that's only 12 years old, and it's only now getting a lot of the attention or the investment that it deserves. People building on top of it, using blockchain technology, improving blockchain technology for a variety of different users, and also improving the transaction volume, being able to use it in everyday use cases. So especially like the Lightning Network, which has been worked at and being used in countries like El Salvador, and they just made it legal tender. So it's only a matter of time before it becomes a reserve currency and be a proper world currency.
Yeah. And like as I said, this is just just the for Bitcoin it's just started, I guess. In that sense, it's just it's on this its first journey, and I think as more people adopt it and start to use it, like you've seen, like for example, like people start to use it, for buying. Like I was reading one of the articles where they were used to buy a pizza back in the day, so I'm pretty sure that guy will be regretting it right now for buying a pizza on that.
Yeah, I mean, I'm sure it sold Bob Pizza for $50 million.
Yeah. So
So,
now,
what?
sorry.
Good work.
And like now you're looking at people like around the world, like you're looking at it's just getting mainstream adaptation, I guess, like a lot of the big hedge funds and stuff looking into the Bitcoin and trying to integrate into their balance sheets and stuff like that. You look at something like Tesla accepting the Bitcoin, you got Square, you got PayPal, and if you got El Salvador as a country first one to start off using Bitcoin on day-to-day transactions, I guess. And it's just the start. Like it's only been around for 12 years. It's just the start. And I think more people will start to use it, and more adaptation will get. And I think it was just the start of the Bitcoin, I guess. And yeah, it'd be interesting to see where it ends up. Like I love to see where it will be in about 10 years time. Will be. I think it's right now. It's like everyone's still pretty like even around my mates. They still think it's just the like just a, like going to the poker machine. I guess just putting money to the poker machine for them. But I think as we wait, I think next 10 more years, as the layer 2 of the Bitcoin network, like the Lightning network and stuff, develop and get the mainstream adaptations kind of thing, and you get, I think they're already talking about layer 3s of the Bitcoin and stuff like that, where they're gonna be used as a financial products and stuff like that. People are getting interest rates and stuff, everything on top of it. I think it's just a start. I think a lot of smart people are doing a lot of smart work behind the scenes, and it'd be interesting to see where it will be. I think in about 5 or 6 years time, I think it'd be funny if someone said they didn't own Bitcoin. I think it'd be probably like everyone probably owning the Bitcoin. Right now it's like, oh, you own Bitcoin kind of thing. And it'd be probably time like, what, you don't own Bitcoin? So I think it's just a matter of time. I think where it gets there, and you got someone like Jack Mallor from Strike who's doing incredible work at in El Salvador with the software and stuff like that. So it'd be interesting to see, how that would be the platform that a lot of people will look into and start adapting, I guess, as a framework on how to use the Lightning network, I guess. And it's just a start, I guess. Yeah, in that sense.
Yeah, I mean, it's just about raising awareness, understanding the system behind Bitcoin. Like, it's not just a ticker symbol that you see on an exchange, like a crypto exchange. Like, it's actually a protocol. There's actually a software method to it. There's a mode of transactions. There's a security protocol that's part of Bitcoin. There's also a privacy network, and also the network effect of Bitcoin. How different miners work. Like, what are miners? How do they work? How does double spending not work? Like, it's not just the stories. Like, it's actually a thing that exists. So, I think it's about raising awareness to how Bitcoin works. Like, a lot of people don't know about how money works, how the system works. They don't know how inflation works. I think just not having that financial education in the first place has gotten us to this situation where we need something like Bitcoin. So it's about start learning about Bitcoin. So I guess our use cases for it develop from there.
Yeah, no, definitely. And yeah, no, thanks for coming on to this. And yeah, we'll do this again next time. Pretty soon.
Yeah, thank you for having me.
Easy. Thanks, guys. Have a great day.